This is Alan Farley from FX Empire. Dow component Apple fell more than 3% on Friday after an adverse ruling in its fight with Epic Games at the App Store. Taking a look back, a very strong rally topped out in the low 80s. This is a split adjusted low 80s in January 2020. Stock sold off in the 50s during the pandemic decline, returning the prior high in June and breaking out to this very strong advance that added plenty of points into September's high in the upper 130s. Well, it's been tough going since that time. We had a breakout attempt here in December and another one in January. Both of those failed. Meanwhile, we have the slightly higher lows sort of stair-stepping up. The stock finally turned higher once again in June, came back up this prior high and broke out, consolidated, and then did this little jog right up to this a rising highs trend line at early part of last week. Now, this is obviously resistance and was perfectly timed with the adverse ruling. So we had 3 tough days down for the stock, down into the 140s, and I doubt that we're done because if you take a look down here at on-balance volume, as you can see, we got up to a new high in August, failed breakout attempt in October, another failed in December, and another failed in January. Then we have this distribution down to a multi-month low. And this is all the buying pressure that we've had since June, even though the rally added something like, from the 125 up to the 155, about 30 points. So it was kind of just right down here. And I think this is going to be a problem now that there's some selling pressure on the stock. So I think as we get into the fourth quarter, we're going to be exposed to this red line down here, which is also where the 200-day moving average is. So if I were on the sidelines, I'd sort of wait here and wait for a decline into the 130s, which may time out with or perhaps even a little bit after the next earnings report at the end of October. So it's probably a good time to be cautious, as you can see the broad market is starting to question the growth rates, and tech is very overpriced, so you have to be careful.